Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about HCC or Hindustan Construction Company, which is in complete disarray. And let's understand what needs to be done and whether something has changed over the last year or two or not. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the HCC company. It was established in 1926 and they provide infrastructure solutions all across India. It was a gem in the 2003 to 8 bull run in which it had moved something like 10-12x from the lows of 2002. It helps in hydel power, transportation, nuclear power, and water solutions. Apart from road infrastructure as well as construction of houses, it helps in all domains of infrastructure construction. And it is part of a large group including Lavasa, and Lavasa is the major bone of contention for HCC. If you look at the financials, and these are financials of actually FY20, so September FY20 versus September FY19, the sales have dropped by around 6%, whereas the profit has gone down appreciably. They had a profit because of an exceptional of about 507 crores, whereas the profit has turned into losses this quarter of around 165 crores. The debt is extremely high at 2,700, 2,800 crores, so nearly 3,000 crore of debt for the company. That has really ruined the company as a whole and taken away all the money of the investors, and the company has now become a single digit stock on the exchange. The return on equity is merely 1%, and where net profit margin is dwindling at negative 12.5, 13%. So if you look at the performance of the stock, stock has been relentlessly falling. It has been down 80% in the last couple of years. At the lows, it was down around 80 to 83% from the highs of 2 years ago in 2017, later part of that. The market cap has been reduced to only 1,500 crores from nearly 3,000 crores. It's now down to around 1,500 crores. Heavy debt is a cause for concern, and this is the major reason why the results are not coming through. So even if the company is producing decent sales number, the sales are going down but not appreciably. In fact, the last couple of quarters the sale went up, but this quarter the sales are down by around 6%. But only a 6% drop in sales has meant that the company from profitability has gone into deep losses, and this is purely because of the kind of debt that the company currently has, and they are trying their best to stave off debt and probably reduce it, and I'll talk about it later on in this presentation. But heavy debt has really taken a toll on the company's numbers, and currently it is nearing all-time low, although the stock has recovered from those lows of 6 or 7 rupees and currently trading at around 10 and a half, 11 rupees. So, what are the reasons or the major reasons for the decline? First of all, the stock doubled in 2016-17. So, in just 6 months, it went up like a rocket and doubled. And people, especially retail investors, went on to invest into the company, and they got the thing, or they got wrong footed and probably have invested into the stock at the highs and currently ruining the fact. But things are changing on the ground for HCC, and I'll discuss this in the next slide. But the reasons for the decline has been one, that the stock had run up a lot in 2016-17, and so the decline was imminent. And low promoter holding, a promoter holding of only 36-37% in the company doesn't bode well for the retail players if the company is already not doing well. So if the promoter holding is also low, then it is not really good for the stock. The results have really been bad, and we've seen that happen now again with the September 20 numbers, which are extremely bad, and we have seen that the company has gone into a loss of around 150 crores. The future is uncertain with elections, etc. So if you understand this, that with elections in many states that are coming up, and with whatever that has been happening with the CAA and the NPR issue here in India, development has taken a back seat, and we've seen where the economy is currently. The GDP forecast is being revised downwards day after day by the government, and downwards even further by other agencies. Then if you take into account the current GDP growth rate of less than 5%, it doesn't augur well for the infrastructure sector, because for infrastructure capital goods sector to really do well, the growth rate should be northwards of 7% or so, which looks highly unlikely in the next 2 3 years. And that is why the future looks really bleak for all the infrastructure companies, even the good ones, which do not have much debt, like NCC, or for that matter NBCC, etc. And for companies like HCC and so on and so forth, it is even difficult for the company to do well. So the future looks extremely uncertain, and that's why people are not getting into it or investing into this company. The small cap mayhem has also contributed to the fall. Whatever that has happened with all small cap stocks over the last couple of years has really hurt the sentiments of those companies which have done, or which have not done well on the numbers front. So those companies which have been weak on the financial fronts have been battered out of shape even further compared to those companies which have been strong. So, what has been the recent developments, and why I am saying that the things are changing on the ground for HCC? Things are not that bad as they were, say, about a year back. The stock has risen 40% from the lows in the last 3 months, and there has been good reason for that. Lenders have initiated a debt recarve, or a debt carve out mission with 2100 crores to be reduced as debt of HCC. So, if you remember at the start of the presentation, I told that the current debt of the company is around 3000 crores, so around 2100 crore will be taken out through a special purpose vehicle, or SPV, which will transfer major debt to itself. So, the SPV will accrue a greater, you could say, IRR than prevailing yields offered by HCC. And this kind of you can say a complicated carve out mission to reduce debt has taken place with other infrastructure companies, and have been successful. So we could expect something big happening with HCC, and Lavasa going out of HCC would also help. So there are efforts being made by the company in order to reduce debt. So if over 2000 crores get reduced from HCC over the next 5 6 years, 4 5 years, this is a 10-year period of the SPV that we are talking about. So there is a slight ray of hope, not immediate, but over the next 4 5 years we could see the stock coming back out of the doldrums. But I still believe that the stock is an avoid. So kindly avoid the stock until the developments, whatever developments is taking place, kindly have a look at them, but do not buy into the stock immediately because of the news that I am telling you. Let infrastructure sector pick up, let the sector pick up, let the GDP come back, and only then invest, because you could see 30 40% bounce in the stock, but there could be even more selling at the upper level because people are stuck into the stock. So have only 5% of your portfolio if you have the stock, and let the debt reduce first and only then buy into it, because this is going to take time. So this was my video on HCC. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it, and kindly help me in Patreon so that I can bring about more videos and better videos for you on YouTube. Thanks a lot for watching.